We're honored to have DeFi Development Corp, who used to be Janova. We've got the CEO, the COO, and the CMO. We've got Joseph, Parker, and John, I believe. Is John not joining us? And we're going to just discuss what exactly is going on. What have they done? Who are they? What's their plan? How are they reserving with Solana? And tell us how we can participate, or how we can understand, and so we can participate in other ways. Janova, go ahead. Can you tell us a little bit about what is Janova? What was it, and what is DeFi Development Corporation?
Hey, Marty, Joseph here. Thanks. Thanks for that. Thanks for setting it up. Thanks for inviting us. Appreciate it.
No problem.
So maybe some of the kind of origin on the company and the team here. So we did a transaction 3-4 weeks ago to take control of Janova Inc., which was previously a real estate professional SaaS company, and we've pivoted the treasury strategy of that business, similar to what we've seen with MicroStrategy, but we're focused on Solana. So after the change of control, we raised about $42 million from Pantera, Kraken, Arrington Capital, and a long list of other kind of crypto native investment firms. And we bought Sol with it that we'll hold on the balance sheet, and we'll stake to a validator that we've also publicly announced that we'll bring into the business. And so in the kind of shorter term, that's the strategy. Longer term, one might expect that the business starts to look a bit more like MicroStrategy, with Sol per share as the key metric for the business, similar to how MicroStrategy focuses on.
Joseph, could you describe to the audience what is the MicroStrategy strategy? What is MicroStrategy?
Yeah, sure. Hey, Parker, you want to pick that one up?
I think it's important for people to understand the context of what you're doing. Yeah. I think that's the best explanation. Go ahead.
Sure. Yeah. So basically what MicroStrategy has done is they've built the best mousetrap, the best machine for accumulating Bitcoin. And there's a number of reasons that this works, but essentially what their mission is to grow Bitcoin on the balance sheet. So when you buy one share of MicroStrategy today, that's worth like, I don't know, 0.05 Bitcoin or something. The goal is that over time, that one share of MicroStrategy is worth more and more Bitcoin. So maybe next year it's worth 0.1 Bitcoin. Maybe the following year it's worth 0.2 Bitcoin. And then over 10 years, maybe one share of MicroStrategy is worth one whole Bitcoin, which is great, right? Like if you go just buy a Bitcoin today, I mean, that's a Bitcoin. And if you, and it stays that way. And if you stick it on a custody platform, you pay fees or something, or maybe you buy an ETF, like it actually goes down a little bit every year. And so what MicroStrategy can do is use, the public markets, they can sell equity, they can sell convertible bonds, they can do a bunch of things to grow that Bitcoin per share. So with Solana, a treasury strategy company can actually do this a lot faster and a lot better because Solana generates yield, and a treasury strategy can run a validator in-house and get third-party delegated stake. So that contributes to growing Sol on the balance sheet or Sol per share growth. There's a whole bunch of ways that treasury strategies can, using Solana, can grow the Sol per share, faster than any other vehicle on planet Earth, whether that's an ETF or a Coinbase account or a Phantom account, staked to an LST or, any other method of holding Sol.
So in your opinion, the whole strategy, the gamification right now is the pursuit of creating yield off Bitcoin. And that's what MicroStrategy is really trying to do, is to create yield instead of just holding, buying, and appreciating as other people buy, is to try and create some profit from holding and give it to the investors through the share price, something like that. And a premium. Let's call it a premium. So
Yep.
So you guys are going to create the premium with Solana, which is way more. There's way more ways of creating premium with Solana, especially with upcoming stablecoin volume and things coming. And the next activation of electronic markets coming on Solana, lots more volume, lots more yield, liquidity pools, DeFi. That's basically the strategy. And tell us about what was Janova before, and like, is this a strategy coming from sort of to make money for the shareholders, or is this coming from like sort of an internal love of Solana? Can you just explain a little bit about that? How did that come about? From real estate lending to Solana?
Yeah, well, the teams are a bit different here. So Parker and I, about 100 days ago, started talking about running a validator together and what we might do in public markets in context of choke point 2 ending, essentially, and the public markets opening up to more crypto companies. We're going to see more crypto IPOs and so on. And sort of through that discussion, we said, well, what's the fastest way that we can get access to U.S. public markets? And we just looked around for kind of a path there. And honestly, we got pretty lucky. A friend of a friend introduced us to Blake Janova, who was the CEO, founder, chairman of Janova, the real estate company. And
got it.
This is like maybe too much detail, but Janova was a bit unique in that Blake himself owned over half the company. So the transaction was simply a private purchase of all of his stock from one single shareholder. And from our new perspective, this is the fastest way to get access to a listed U.S. listed public company vehicle. And we're actually, we like these guys a lot. So the team is still in place running the legacy real estate business, and that's been great for us because Blake took this company public himself. He wrote the S1 himself, which is the document that essentially lets a company go public. And he's very creative in the public equity markets, I would say. The CFO, we have retained him. He's EVP Finance now with us, but he was a CFO at publicly traded companies for 20 years. And the audit chair on the board has also been a public company audit chair or CFO for the last 20 years. And our backgrounds, we're all sort of crypto natives. And we all worked at Kraken together. The team that we brought in to Janova, now rebranded to DeFi Dev Corp, are all kind of Kraken alumni. I was there for 8.5 years. And so this kind of combined team with the, say, crypto expertise, certainly, the experience, combined with these folks who really understand the public markets and fundraising in the public markets has been a really nice combo for us.
That's fantastic. That's an incredible story. And this is you guys are all out of Florida, or is it a global, or is it just a US based thing, the whole sort of team?
The team's pretty distributed. Yeah, some in the US, some in Canada, scattered around in Europe and even the Middle East. And the Janova original team, the guys I was just describing, they're in Florida. Yep.
So you call it a crypto-centric focus now. So the company's literally changing its entire value proposition for the shareholding, right? So explain to the people, how does that work? So you've filed to become DeFi Development Corp. That's now your new name, right? But your stock will remain JNVR until a certain date, or what is the process to do this?
Yeah, so really the only thing we've changed about this business is the treasury strategy, and
got it.
Then the name. But name change is simple. Ticker change takes a little longer. There's like a NASDAQ review process that takes some time, but we're working on it. But the legacy or core business is still intact, and for now, we don't have any plans of doing anything else with it. We actually are pretty bullish on the core business. The Q4 numbers looked pretty good. Their SaaS business is growing. They're not profitable alone, but we'll have to see what future quarters bring for us there.
And then I see you created a new website, DeFiDevCorp.com, everyone listening, DeFiDevCorp.com, where you can go learn and see the new branding. And there they've introduced what's quite interesting over the last few days. I've been seeing this appear, is this new sort of fundamental metric called SPS, right? Sol per share. That's like an invention, right? You came up with that.
So, MicroStrategy uses Bitcoin yield as their metric, which is really just the inverse of, Bitcoin per share. And so we think more directly, just calling it what it is, Sol per share, SPS, has a nice ring.
I love it.
And that's our full focus.
It's such a great ring. It just makes so much sense. That was a real smart move. I like that a lot. And so the whole business, the overview of the business is Janova continues doing what they were doing. So you're just sort of an umbrella at this point. I'm trading under JNVR, which will be changed at some date. Tell us about DeFi Development Corporation. What's the goal? What do you guys want? How are you going to kick ass? What's it in a nutshell?
Yeah. So, and about the symbol change, hopefully that'll happen maybe this week or next week. So we should be pretty soon on that. But the business DeFi Dev Corp, the goal is, as I mentioned earlier, the sole focus is Sol per share growth.
Enjoy that. Sol per share growth.
Sol per share growth. That is our key metric. That's the North Star. That's what we're entirely focused on. So we're going to do that through a number of different avenues. This is nothing, no secret sauce here, no insider information or anything like that. This is all publicly disclosed, but we're going to have Sol. We're going to stake said Sol to our own validators in the near future. We want to acquire some validators. We can buy locked discounted Sol. So we announced
that's something I'd like to bring up later on at some point, just how that works so people can understand. Carry on.
Sure. Yep. And so there's that. And then there's, some capital market stuff similar to what MicroStrategy does, where we can issue debt and also sell equity at a premium, which helps grow Sol per share. And then there's some potentially other interesting things that we can do in DeFi to generate a little extra yield as well. And then lastly, we can get external delegation to our validators. So, we will be the second public company to have a Solana validator, Coinbase being the first one. We're kind of a pure play as well in that regard, pure play Solana company. And so we think that a whole bunch of people out there will want to stake to us, whether that's ETFs or other corporations or, just average people that like the performance. We plan to have best in class fees, beating out, all of the major staking providers out there. And we've also announced a partnership with Kraken to receive a portion of their 4.5 million Sol of delegation as well.
Wow.
So hopefully we'll be able to announce more of these types of things in the future. But to the extent that we can get, this external delegation, all the fees are paid in Sol, and we just keep those fees, and those also flow to more Sol per share, which is pretty cool.
So you've already bought your initial Sol. You have roughly, I'm reading your article here, it says you're roughly 317,000 Sol.
That's right. Yep.
Right. So that's currently staked. And
that's
then
correct.
Then you published an S3, right? Which is really what caught my eye, where you announced raising $1 billion or possibly up to $1 billion through security offerings. So explain the strategy of that S3 so people can understand it. I try to interpret, but I want you to explain what's your plan to grow with that
Sure.
$1 billion? Go ahead.
Yeah, so an S3, it's called a shelf registration, and it's essentially just a little registration with the SEC that allows you to issue all different types of securities, whatever types you put on there in the future for, I believe it's 12 months. And so it's kind of a, it's an easy way to be able to issue securities in the future versus having to file a new S1 every time you want to sell any securities. So there's all sorts of things we can do with that. It allows us to raise capital from a variety of different types of investors and different types of structures. And it's just kind of a flexibility tool. And we can raise then up to $1 billion over the next 12 months, or until we want to file an amendment. So, I don't know, maybe we raise $1 billion faster and then we can go do another one. Joseph wanted to do $1 trillion S3, but we kind of talked him off that ledge. So we're sticking with the humble $1 billion to start.
Okay, that might have been. I mean, yeah, I did talk to legal about doing $1 trillion, but this doesn't actually it's like a pre-approval essentially to do these fundraisings, but it doesn't necessarily mean it'll happen, right? Like the market has to kind of agree and actually put the money down, right? So this is sort of expanding headroom for fundraising, but it doesn't necessarily mean that it would happen.
Got it.
That's true. And to be clear, the filing that we did was, requesting SEC approval. There's always a chance that, they don't approve it or it takes a little while. So nothing's like even final yet.
Absolutely. So then there's been subsequent. So let's talk about the BitGo OTC. It's basically an unlock schedule, right? So your purchase, you mentioned a purchase of 65,000 SOL, roughly $10 million, acquired as locked SOL. What is that exactly? Does that mean?
Yeah. So in the initial Solana ICO, there were some large blocks of Solana purchased, and they had lock schedules on them, or maybe unlock schedule is a better way to put it.
Right.
And Alameda purchased, who we all know and love, or not.
Sam.
Yeah, right. Alameda purchased a whole bunch of these, a whole giant block of this SOL. And they purchased it, I believe is at a discount. So then, of course, when the bankruptcy happened, and the bankruptcy liquidators, they sold all of this locked SOL at a pretty substantial discount. I think it was like 35, 40%, maybe greater to the current SOL price. And so you had a lot of investors out there that were out scooping it up, buying like, hey, this is great. Discounted SOL. Yeah, sure. It's locked up. It's monthly unlocks. But like, if you believe in SOL and want to hold it for the next, many number of years to decade, then why not get a discount on it, right? You're getting paid to sit, which is what you would be doing anyways. And this SOL can all be staked, by the way. So you're not giving up staking rewards. And so a whole bunch of investors, in those dire times and the depths of the last crypto winter, when the FTX bankruptcy court or, liquidators were out selling this stuff to, get cash, so they could pay people back. They sold to these investors. And so now some of these investors, they want out, right? I mean, the price of SOL is up significantly since then. And so they want to realize some cash. Maybe they need to pay out some LPs. Maybe they want to go, buy some other coins or whatever. And so there's actually an active market for this discounted locked SOL. And so we did a purchase from a third party, and BitGo served as the broker there. And we'd like to buy more. And because we're long term,
what was it like working with BitGo?
BitGo's great. We love the guys over there. There's some ex-Krakenites there too, which is kind of cool to get to work with. But they're super flexible, super helpful, and been a great partner for us so far. We've only been working with them for a couple weeks, but I like what we're seeing so far.
Yeah, that's terrific. That's great to hear from you. And then, so staking, what validators did you guys, what did you start with? So did you just place it on a validator, or have you actually spun up your own Solana validator yet?
Yeah, so we staked the initial purchases. We made on Kraken, so we use Kraken as well, and so we made those initial purchases on Kraken and staked on Kraken, and then the BitGo stuff. There's a validator there that's kind of contractual. We're contractually obligated to continue using with that locked SOL. So we're kind of, stuck with that validator. I won't mention the name, but, they do a pretty good job. But we've also stated the intention at some point in the future to acquire some validators to bring into the business and then run our own. And, then we keep the full fee there because obviously we're not charging ourselves a fee and stake to that. So we get, higher yields by staking to our own validator, essentially.
Got it. Here's the lovely question. If you were to spin up a validator, would you spin up a 2.2 version? Would you want to do a Firedancer type thing? Like, what are you thinking? Are you guys going to wait on Firedancer, or are you going to spin up an Anza server first?
Yeah, definitely sticking with maybe it's controversial. I don't know. Definitely sticking with 2.2. I've actually been running a validator myself for a year and a half now. So yeah, I'd stick with 2.2. Frankendancer is a little it's still in I know it's technically production, but there's still some issues with it. So super excited.
What is Frankendancer? Tell people what exactly is that?
Yeah, so Frankendancer, it's kind of the precursor to Firedancer. So Firedancer is a full client, new client for Solana validators, entirely rebuilt from the ground up. Frankendancer is like this, weird Frankenstein hybrid, hence the name, where parts of the Anza repo and the code are still used, and then other parts are migrated to the kind of the Firedancer code. And so it's like the two repos smashed together. And then over time, they're kind of like swapping out different chunks of the Anza piece and sticking it into the, using Firedancer code for that. And so it kind of makes it a little more seamless. There's like this transition and you can test out different parts. You can test out the bank or the consensus mechanism or whatever. Without, yanking out everything and trying to test the whole thing in one go, which is, much more likely to break.
Got it. What is your estimate, or in the community, what is the estimated time before the first actual Firedancer versions roll out? Do you think it's going to be this quarter or next quarter?
I think it's going to be a little longer, to be honest. There've been some kind of stop and start type challenges with Frankendancer. A few validators have run it and then they've halted a few times, had some issues. And then of course it's been tough to get people to switch to Frankendancer because of these issues, and people don't want to lose their stake from a performance pool if, they have an issue, it goes down, whatever.
Right. So it'll be a long, slow stake upgrades, very carefully tested, very carefully rolled out, more than just a big day where it goes live, right?
Yeah, so I could see, the goal is of course to have multiple clients, right? And that's kind of what gives the network some resiliency. Is, let's say you have in the long term, 5 different clients running, and the holy grail is 5 clients that are equally used, so 20% of the network is running on each, and then if one has a bug, then you only lose 20% of the network to some type of outage, and the rest of the network can keep going. And so that's kind of why you want to have multiple clients, multiple teams building these clients. It just builds resiliency and robustness into the system overall. And so long term, we're going to still have Anza, and people are still going to use Anza probably. But Firedancer has some performance improvements and some subset of the validator community are going to run Fire Dancer. And then hopefully there's another one. I don't know. Maybe it'll be like the Water Walker or something. And so, that's kind of the, where we want to get to as a community.
No, that makes absolute sense. Yeah, I'm quite good friends now with the Sol Strategies guys, Leah and Max.
Cool.
And watch their sort of strategy roll
This space was downloaded via spacesdown.com. Visit to download your spaces today.
out and their acquisition path. And so you guys are sort of trying to be another of the similar type company, which runs validators, but also sort of invests in Solana ecosystem stuff. Can you talk about that? How would you go about that? What is on your radar? What are your thoughts?
Sure. Go for it, Joseph.
Sure. Yeah. I'd say the strategies are diverging from my perspective. I'd say Sol Strategies is more focused on the validator acquisition play and building a Solana infrastructure business. And I think DeFi Dev Corp is more focused on our key metric of Sol per share growth. And I think there'll be many companies that adopt Sol as a treasury asset, similar to what we're seeing with Bitcoin, right? Like all kinds of companies are buying Bitcoin and holding on the balance sheet. So yeah, I don't know. I guess I see a future where there's, I don't know, maybe hundreds of companies that hold Sol and maybe thousands of companies that hold Bitcoin. And yeah, I'd say the businesses are actually pretty different in that kind of future context.
Yes, absolutely.
Yeah, and I think.
Go ahead.
I was gonna say, I think just to jump onto that and put a finer point, we're hyper focused on Sol per share, SPS growth. That's what we care about, and we're just going to talk about it nonstop, over and over and over again. And so, if somebody wants exposure to a growing Sol balance, I think we're the best spot for that. If somebody wants something else, then there's other options out there for that. But our goal is to grow Sol as fast as possible, and that's what we kind of offer to our shareholders.
Right. I think we have to pivot almost and talk about this upcoming Stablecoin Regulation and Genius Act. That looks. I mean, we had a space yesterday with John Deaton and Perrin Boring, and looks like they're going to have these things in law in the US before the August Senate goes, to recess. That's fast. So we could expect to see it legal for any vendor or merchant to accept, USDC on Solana with just a peer-to-peer payment, and that's going to, I think, just launch mainstream crypto adoption just through the savings achieved by using stablecoin over the current, MasterCard, Visa point of sale experience. Have you guys thought about that? Is it no coincidence that your DeFi Development Corp, are you going to offer companies services to, accept DeFi directly without going through fiat at all? Can you talk on that at all?
Sure.
Yeah, go ahead.
Yeah, so we're super bullish on stablecoins on Solana. And we actually did a portion of the deal with Blake using some USDC
cool.
on Solana. And it was like night and day. He hadn't done it before and, used crypto before in that way. And so
it's almost weird, right? You go, it's done.
Yeah, exactly. And he was like, whoa, this is great. And then we did the rest in a wire. And he was like,
oh
it
God,
just sucked, right? It took multiple days. And I mean, it was just like, so it was funny that, and I don't know, maybe prescient that like from the very beginning, it was very clear, like we were answering our own question kind of at the outset. Like, look, the future is DeFi, it's the Solana ecosystem, and like even just moving dollars in the Solana ecosystem is so much better than in the traditional banking system. And this was all like, US, North American, movements. This wasn't even trying to move money, halfway across the world through, multiple different banks and all that. I mean, that just gets even far worse. And so, I personally and everyone on the team is hyper bullish on stablecoins on Solana. Like, it's just a far better experience. It's instant. It's almost no cost. It's, I'm sure everyone here has used stables, or hopefully, in the Solana ecosystem, but it's just such a better experience.
Yeah,
as far as it goes,
I agree. I think getting paid in stablecoin will be a massive event. That whatever regulation it takes so that like ADP can pay people with stablecoin, and then then they can go and spend that in the economy, will be a tipping point for crypto. That if I was exactly. Can you talk on that? What do you think of that?
Yeah, no, I completely agree. Very excited to see, payroll done in stable coins at a more, accessible level. We do some payments to certain vendors and employees in stables directly. It's just a lot easier. It's pretty cool.
Your company should be able to run completely with Sol, almost.
Yeah, absolutely. Like,
that's so cool.
I cannot wait for the day that we can delete our bank accounts and like entirely run everything on stables. Like, it's so much better. It's so much easier. I am so excited for that day and would love, candidly, to help push the envelope, and maybe be a little ahead of the curve doing that, to the extent, it's safe. But yeah, so I completely agree. We're very excited for that future.
That's terrific. And so tell us about some other ideas about how you can increase the SPS.
Sure. So let's see. I mentioned. I think I've kind of covered most of the big ones at a high level.
How about we take that from perspective of MicroStrategy and the convertible debt as a driver of Bitcoin?
Do it. Yeah, go for it.
I was thinking you could.
Oh, okay, sure. Okay. So we can walk through the MicroStrategy playbook a little bit, and then you can just apply this directly.
Absolutely, that would be great.
So what MicroStrategy does, they do a number of kind of financings in the public markets, and the U.S. public markets are the most liquid markets on planet Earth. Far more liquid than even crypto, although crypto is definitely catching up for sure. So what MicroStrategy does, they do a couple things. Two, kind of most famously, although they've recently launched their preferred shares, which are just kind of a derivative of the two main things that they've been doing anyways. So the two main things are what's called an ATM, an at the market issuance of shares, and the convertible bonds. So the ATM, they are essentially just printing shares out of thin air, sticking it into effectively a brokerage account, and then selling it into the open market. Now, why does that work? Well, they are trading at a premium to the Bitcoin that they have on their balance sheet. And that's because long-term people think it's going to grow. And so they're willing to pay, more than the Bitcoin is worth, right? So today they trade somewhere around a 2x premium to NAV, which means if you buy $2 worth of MicroStrategy shares, you're going to get about $1 worth of Bitcoin. And the thinking is over time, that $1 worth of Bitcoin is going to grow into 2, 3, 4, whatever dollars. And then you'll, have had some growth there. And so what MicroStrategy can do is they can sell shares at the $2 and get $2 and then turn around and put that into Bitcoin. So they sell $2 worth of shares and then they buy $2 worth of Bitcoin. And so now there's, in my little example, now there's $4 of shares out there. There was 2 before, and now there's 4, but there's $3 worth of Bitcoin on the balance sheet instead of just 1. And so now there's more Bitcoin, and the ratio actually of the shares to Bitcoin has gone up, right? That's that Bitcoin per share growth. And so then people get excited and they buy the stock because they're like, wow, this is growing. This is great. And so then they can sell more shares, and we can kind of just do that as long as the stock is trading at a premium to the the Bitcoin on the balance sheet. So they don't sell stock when it's trading at a discount or at a 1-to-1 ratio. The second thing they can do, and this is really the main hack, if you will, the financial markets hack, is they sell these convertible bonds. Now, what's a convertible bond? Well,
Yeah, what is that?
A convertible bond is a fixed income instrument. It's a bond where there's this feature to convert into stock. So you can think of a convertible bond as two pieces. A bond, it pays an interest rate, it has a maturity, right? You invest $1 million and then you're going to get paid 5%. And then in 5 years, you're also going to get your $1 million back. Very standard bond. Bonds are the most kind of liquid instrument, financial instrument in the world. US Treasuries are a bond. But then a convertible bond has this feature on top that says, hey, if the price of the stock goes above X level of price, let's say the stock is trading at $100 today, the convertible bond might say, you can also convert your bond into X number of shares. And that equates to, let's say it's a $130 share price. So let's say you put $1,000 in and you're going to get, maths, I don't know, like 70 shares or something if you wanted to convert. So obviously you wouldn't convert today because the price is 100. And so when the stock is trading at $100, you're only getting 70 shares. So you're only getting, 7 shares. You're only getting $700 worth of shares. So you're not going to do that, right? You're going to keep your bond, collect your interest. Great. But if the price moves up to, let's say it's 130, and maybe that would be the strike price or the convert price on this convertible bond, now you could convert your $1,000 bond and get 7 shares. And hey, now it's worth, $1,000 or, $950 or whatever. And so as the price of the stock continues to go up and up, your likelihood to convert this bond, delete the bond value. Hey, I'm not going to get paid back in, cash. I'm not going to get interest anymore, but I'm going to get these shares. That starts to become more and more attractive. Now imagine, the stock is trading at $300 a share, and you've got this convertible bond where you can convert it into 7 shares. Well, sweet. I paid $1,000 for the bond, and I now can convert into 7 shares, and these shares are trading at 300. So, my $1,000 is now worth 2,100. That's pretty, that's great. That's a 2.1x return. And if the stock doesn't go up, maybe it stays flat, maybe it goes down, whatever, then you get your interest, your 5% every year, and then you get paid back. So then it's just a regular bond and, you're happy. So the unique part about MicroStrategy is, so let me back up a little bit. These convertible bonds, that optionality to convert into equity behaves exactly like a call option that you could just go buy out in the open market.
Right.
Pop open the SIBO, it behaves like a call option. So how are call options priced? Well, call options are priced based on volatility, right? So if you buy a call option for, that can get exercised at $150 and the stock is like bouncing around from 101 to 99 to 102, like the likelihood of your call option being exercised and getting into the money is like very low, right? So that call option is not going to be worth a whole lot. However, if the stock is super volatile, it goes up to 150 one day and then up to 200 and up to 300 and then down to 200 and then down to 50 and it's just like flying all around, then the value of the call option goes up. All right, and this is just options pricing, Black-Scholes, whatever. And I apologize, this is a little rudimentary for everybody. But so because the option is more valuable when there's higher volatility, then what that means is for this convertible bond is that MicroStrategy can sell the convertible bonds at a higher price because their stock is super volatile. So like, let's say like a Procter & Gamble, they could sell convertible bonds, but the option is not worth that much, right? Because Procter & Gamble is pretty stable. They don't move around too much, like they're a stable company. Great. But MicroStrategy is super volatile, right? It just moves around all over the place. It's actually a lot more volatile than Bitcoin. And so these convertible bonds, they can sell for a whole lot. And so what does that end up equating into? Well, that means they can issue them for 0% interest. That's pretty sweet. They don't have to pay any interest rate. And then that also means they can set the convert strike at a pretty high premium to the current stock price. So back to my Procter & Gamble example, maybe they can only sell these converts at a, with a strike that's at a 10% premium to the current stock price, or 5% or whatever. But because MicroStrategy is so volatile, they can sell at a really big premium, a 30% premium, a 40% premium, whatever. So this is great because MicroStrategy then is effectively, you kind of think about it, selling stock at a 30 to 40% premium to the current stock price. So if the stock is trading at $300 today, then they're able to sell, these convertible bonds with this strike at like close to $400, which is pretty awesome. And then because, Bitcoin generally goes up over a multi-year time horizon, and MicroStrategy has this Bitcoin per share growth and everyone's excited about it and continues to go up, then those convertible bonds are very likely to be converted into stock, and MicroStrategy is never going to have to pay back that cash. They just keep the Bitcoin that they used, and then they instead issue shares to satisfy the bondholders. And the bondholders are happy because, the stock went up and it went above their conversion price and they made money too. And so by selling stock at a 30 to 40% premium to the market, they just, with these convertible bonds, they just take all that cash and just buy more Bitcoin with it. And that also grows the Bitcoin per share. So again, that was a long explanation. I'm sure people have done it much more succinctly than I have, but that's essentially what's going on. That's some of the secret sauce here, is these convertible bonds. And they're able to sell these at a giant premium to the stock price, which is, great for Bitcoin per share growth.
No, that's fantastic stuff. Thanks for that brilliant explanation. Are there any questions in the audience? It's at 11:48. Peter, go ahead.
Nice to meet you guys, Joseph and Parker. That was a great explanation, actually. And then believe me, there's no such a thing as not enough explanation for what Michael Saylor does, which is fantastic. He just reviewed it for everyone, and even professional traders and people who are amateurs, they're still confused after listening to him a million times. Congratulations on your endeavor, guys. You've done a tremendous job. So that's from a real estate to a sole strategy company, no pun intended on the name. It's a great thing. Just wanted to ask you guys. So this, and I'm sure it's going to come up again and again, and you've mentioned that as well. That SOL per share pricing, and Marty asked earlier about the SOL strategy. So to back up a little bit, MicroStrategy uses sats per share, and that grows up as the NAV premium increases, and then as the Bitcoin goes up in value. So the potential here is the same, right? So Solana goes up in price. It's at some point it will, and then you are increasing your NAV premium essentially that way, and then you have that SOL per price included into your earnings for the investors, correct? And also, just to understand it, so as the price of the asset goes up, does your real estate connection has anything to do with Solana? Are you backing it up in some way? Is it like a positive equity in a company that is leveraged, or is it just pure SOL? That's kind of question number one. And number two is, Saylor is not a validator, obviously, but you guys are, and you're planning to be a validating company, which essentially is sort of like a banking in a way, right? It's a crypto banking in some way. So how is that going to benefit your potential investors by you being a validator? Is there any money that will be earned by the company and then passed along as benefits to your potential investors?
Yeah,
Sure.
I'll do the real estate one, I guess. So on the real estate business and the treasury strategy can be thought of as separate, I would say. We've explored synergies between the two. We could tokenize real estate, or I don't know, a few other ideas, make payments easier for real estate transactions, that sort of stuff. But I don't think that those are well, I know they're not shorter term goals for us, and the kind of core business is like a real estate professional software business. So I'd say outside of the people, there's not a great deal of synergy that exists there, and I'm not sure that the market should not expect or anticipate some kind of real estate Solana combo play. It's just treasury strategy and real estate professional SaaS. And maybe Parker wants to pick up the validator and whether it, how it's accretive to shareholders question.
Sure. Yeah, so it's accretive in a couple ways. First off, when you stake Sol today, if you don't run a validator, you stake to a third-party validator, very likely you're paying fees to said validator, right? Maybe there's an inflation fee, maybe not, but maybe there's a MEV fee. And even if not, there's probably a block reward fee. I know there's a few validators out there that manually pay the block rewards back. And at some point when SIM 123 gets implemented, then it'll be protocol native sharing of block rewards. But today, most likely, 99% of the time, you're going to be paying a fee to the validator if you have stake and you want to earn yield. So by running a validator in-house, we capture all that ourselves, right? We're paying a fee to ourselves, and the shareholders are essentially getting the full amount there, the full Monty on the staking and validator profits. Additionally, though, because we're a SEC regulated NASDAQ public company with audits and all the controls and all the things that you would like to see from a suit and tie, buttoned up institution, there's going to be lots of institutional SOL holders that want to stake to our validator, and we charge a fee on that, right? So they don't want to stake to the wild crypto guys who are based wherever and anon and whatever. They want to stake to someone that they could talk to and that they know is all buttoned up and has the certifications and audits and all that stuff. And so to the extent that we get external stake, and that is a focus of ours as well, all of those fees are all paid in SOL, and all that SOL goes straight to the balance sheet, straight to the shareholders. And so we can also grow SOL per share just by running a validator business. And it's no extra work really, other than the sales part, to run SOL delegation from other people and to run it, for our own SOL. So that's how it's accretive.
Excellent points,
Parker. So the real estate, I'm just highlighting a point again. The real estate is in no way a sort of a leverage thing, so you can have that bridge between the button down, as you mentioned. It's a good description, and the business itself. So that's they don't have that as a backup sort of to their investment, because it's an interesting point that there's always a challenge in anyone's mind. I'm not going to speak for everyone, but I think it's the majority's consensus that when people devote their soul, say, to a validator, they're kind of like giving into a little bit of an unknown, right? And that holds a lot of people. Obviously, the percentage and the yield is an attractive thing, and people want to make money, so to speak, but it's always a risk of some sort. So accessibility to your company and making you different from, say, from others, other validators, it would be that balance sheet that is not just the main asset that's Solana, but also backed up by the real estate that would make it tremendously attractive, in my opinion, to offer something to people. So this company is not insolvent. It has the backing of the real estate. And then have you guys thought of that?
Well, I'd probably actually argue that it should go the other way, because I think some of these investors, I'd say many of the investors in this space, are actually looking for the volatility. So let's say you had a company that, I don't know, to take the real estate analogy, let's say they take half their balance sheet, they got like $1 billion. They put half their balance sheet into Sol. They put it half into, I don't know, some really stable real estate. Maybe I don't know, they buy like New York real estate. I have no idea how stable that is that a more attractive vehicle for investors to get exposure to those assets, or is it better to have two companies that specialize? So there's one that's like a pure play Solana treasury strategy company for investors who want exposure to Sol and are focused on Sol per share growth and are willing to take the downside risk of Sol's potential volatility, and then another that's like a real estate investment company. And I may be wrong, and maybe the market will, educate me otherwise, and I'm happy to further discuss. But my expectation is that the two companies separate, where investors have the choice of what they want rather than like the choice of management and one option, is a better path.
Yeah, that's excellent. Any other questions, guys? Those are excellent answers. I'm learning so much. Any other questions? Put your hands up over there. Anybody? I can see you down there. We've got 3 more minutes of their time. Guys, this is really interesting stuff. What is the next big hurdle? Are there any big announcements you can make now as Alpha?
We're a publicly traded company, man. We can't do that.
Yeah. And the price obviously skyrocketed of your stock. I mean, has that elevated your profile? Like, has it got you? It was quite a move, 970%, correct? I mean, you can't talk about it, I guess.
Somewhere around there. Yeah, we've gotten a lot of attention about this, of course, right? Like, you're willing to have us on the show. Pretty awesome.
Yeah.
So thank you.
No problem.
I'd say how these transactions are done for a change of control of these businesses matters quite a bit for what happens to the share price. So in our case, it's almost like structural to the transaction type that the stock price would run up, in my view. So before the transaction, Janova's market cap was like, I don't know, say $7 million. And we bought over half the stock of the company just in one transaction, kind of personally, no new stock issued. And then we raised $42 million into that company. So I think it sort of makes sense, or one ought to expect, that if that $42 million is considered, or valued as cash, then the company might be worth, or any company, not our company, in this situation might be worth 42 plus 7, and the market cap ought to just reprice to that, is how I would think about it as an investor. And of course, we hope that there's a NAV premium after we start to buy Sol, which I think the market has rewarded the business for since then. But I'd say much of that initial run-up is just like a outcome of the structure of the transaction, where if you bring that much cash into a business with no dilution, then something's got to move, and the price per share is what the outcome was there.
And maybe just a correction: the stock is up about 1,700% since we did the change of control. I'll just sling that out there.
That's excellent news.
My point still stands.
Absolutely.
Hey guys, any more discounted Sol out there to buy or no? That was mentioned in the beginning of the conversation. The discounted Sol that piqued my ears and got my attention. So I'm sure everybody else.
Was that through Figure Markets? It's BitGo, right?
Yeah, we did.
Yeah, we did that one through BitGo, but there's other brokers out there, and we're talking to lots of people, and spelunking around looking for this stuff. So if you guys know of any really good priced Sol out there at a discount, let us know. We'll buy it.
Yeah, we will. Absolutely. I'll DM if I hear anything through my network. Thank you so much for joining us, guys. That was a fantastic hour of education. This is a recorded space, everyone. You can share this and record it and rip it to MP3, put it on YouTube, whatever you want to do. DeFi Dev Company, thanks so much, Parker and Joseph, for coming. You guys are brilliant. If there's anything we can do to help you, if anybody has any questions, go and give them a follow, and you can ask them directly there. But it's nice to have you in the crew. We're big Solana believers, and so joining the community is huge for us. And any news or alpha you have that's stimulating or insightful, just let us know. And come back anytime if you want to. If you have a big presentation or something to report, we can run a space whenever you need it. Appreciate your time.
Awesome.
Thank
Thanks,
you, guys.
Marty. Really appreciate it.
That was the Office Presents DeFi Development Corporation, everyone. And you can trade them on the NASDAQ. JNVR is the ticker, JNVR, or on X DeFi Dev Corporation. Welcome to the team. Very nice to meet you, and so much education and alpha. I suggest everyone listens to that again. Okay, you guys all have a good day.